Hello, hello, hello. Welcome to the Bull Waves weekend update. This is Enda here, back with the worst produced Elliott Wave video on the weekend. The worst produced Elliott Wave video on the internet. See, I can't even say that right. I was trying to own that statement. Okay. As usual, I'm going to go over the 9 markets that I cover on bullwaves.org, and I am going to kind of pull them apart and see the week we've had, and to see if we can make any sense of the week upcoming. Yeah, it's been a strange week, and I know I'm recording this kind of early. We have visitors coming, so I want to get the video and tonight's update done early, because I'm usually doing this at around 11 o'clock at night, so that's never advantageous. So it's been a strange week. And I may as well just stop rambling and just get into why. Okay, so I'm going to start with Eurodollar and work backwards, or work forwards, whichever way you want to look at it. This is the 4-hour chart, Eurodollar, and we're still working with a wave 2 interpretation, either wave 2 here in blue, which would be the alternate count, and that would view the larger structure as a whole second wave correction, or we've got a leading diagonal down into a possible wave 1, and now we're working on a wave 2. I prefer this one, obviously, so that's the working interpretation at the moment. And right now we're just we're trying to pull apart the action and see what the hell is going on with this short-term action here. It's been strange, and it's been interesting and a hard one to kind of nail down for the last couple of weeks. But we are drawing to a close of this correction, and as usual with complex corrections, you don't usually know until the very damn end what the hell is going on. So, given that it's been a kind of a strange, frustrating week, I may be there may be a few more expletives in this update than usual. So, I'm sorry, I just have to forewarn you there. Okay, so that's the 4-hour chart. We're working on a second wave correction to the upside. Kind of tentatively looking at the 115.50 area to complete. Okay, so this is the hourly chart, and I had changed this count last night, and I've had to change it again because we had a dip to a new low today, and that has kind of ruled out the previous interpretation. I'm going to say interpretation an awful lot this week as well, I think, going by the last few minutes. Okay, so you can see here that wave 1 completed with a possible leading diagonal or wedge pattern into the 112.15 low, and we could be looking at a 3-wave flat, possibly correction here. We've got a wave A up, wave A, B, and possibly a low in wave C forming this evening. And this one here is slightly strange because we haven't hit a new low just yet. We're probably, well, almost a double bottom. I'd say low enough to call that a simple flat. Well, it's a complex flat because this is a 3-wave move here, but we'll leave that out for dry. We won't really need to talk about that. What we need to discern for next week is, are we going to get a C wave rally into that resistance area, that band of resistance there, which has held the market for the last couple of months now, since the beginning of November, or back even further. You had that kind of spike high there in wave 4, and that was back in the 7th November. So yeah, for the last month and a bit, we've been knocking up against this zone of resistance here, and we haven't been getting anywhere. So we've been kind of stuck in a correction, and it's been untradeable basically, but it's been causing a little bit of consternation in my mind anyway as to what's been going on. So I think we've got a wave A complete. We've got a 3-wave wave B most likely complete at this evening's low. Maybe there'll be one more dip on either this evening or Monday, the overnight Sunday maybe, and we should get a rally up in wave C of 2, and wave C's should usually be in 5 waves, but the fact that this whole damn thing has been so let's say all over the place in terms of its internal structure, there's no reason to believe that this C wave up won't be another kind of corrective three-wave move up as well. So it might make it into a triple combination or something. Or so I think for next week, I'm still going to expect a rise into that resistance zone there at about 115, maybe a break above it, but at a minimum a break above that wave A high there. So that would be at 114.72, but somewhere within there, somewhere around the 115, low to mid 115s, we're looking at a completion of wave C and a three-wave rally, or three-wave corrective rally in wave 2, and at that point then we would look lower into third wave down. Okay, so I've rambled on enough about euro dollar. Let's get on to pound dollar, and I can ramble on a whole lot about pound dollar now. So pound dollar has been a bit of a nightmare over the last, again, since we've just ranged off the wave 1 low off, so that's since the 15th of August. So we've basically stuck within this range. We got a break lower, but we're popped back up again this week. But I think it's all one structure as far as I can make out. And slowly, as time goes on, it's kind of revealing itself as to what the internal pattern is. But I think we can expect a rally to complete a larger three-wave structure, possibly a type of complex expanded flat of some sort, at about 133 or so over the next, let's say 10 days or so, to complete a rally in a corrective rally again in a second wave, wave 2 there. I can see we've got three waves up in wave A. We've got a possible wave, three waves down in A, running flat wave B, and what I can only comprehend as a complex three-wave move again in wave C. So this would be kind of like a triple combination within wave B itself. So again, the base case scenario is that wave C will trace out 5 waves, but we'll just see what happens as that unfolds. So the outlook is for a rally up into that initial resistance there, 133, to complete a whole three-wave structure in wave 2, and then we would look lower again for a run down in a very large degree wave 3. Okay, so let's get on to dollar yen. Dollar yen has been, as I've been talking about over the last few weeks, it's kind of hanging 50-50 between two pretty decent, pretty strong wave counts. From this point on, I have, from say the low of the 26th of October, I have labeled it with the alternate count, which would view this whole sideways move since 2015 as, well, it's been a ranging move, but a contracting ranging move in a triangle. You can see there I've marked wave E. I'll actually go to the daily chart to just show that. So you have that 2015 high, what was it, 14th of June 2016, and you've got a possible A, B, C, D, and E maybe into that October low, and off that October low you can count 5 waves up and a 3-wave correction. So this is the little indicator that we are looking at the moment for a rally up in either a third wave or a first wave. If it's the alternate count, well then it's a first wave rally. If it's the current wave count, well then it's a third wave rally. It'll be a wave 3 of 3. And I know that's a little bit confusing, but stick with me, it might just clear up. So if this is the end of the large degree triangle, and it may be, we have a kind of an ending diagonal there, a wedge pattern to complete a C wave of that E wave. So off that low we had a decent move up in a 5-wave structure, and we seem to have had a flat correction into last week's low, and now we're seeing a nice impulsive structure to the upside again. So let's get into the hourly chart and kind of parse this out here and see what we can if we can make any sense of it. There's that flat, there's the low of the 26th of October. So off that low I'm counting 5 waves up, ending diagonal there, wave 5, and A, B, C, and an ending diagonal wave C again. So you can see how is it understandable that that the structure is kind of tripping me up now and again. A ranging market will tend to do that anyway, and I suppose the fact that we're moving into the end of the year and volumes are slowing down as well, that I suppose you would expect that to happen in some cases. Definitely in this case anyway. So I think we've got a flat wave at 2, and the fact that this was a 3-wave, pretty clear 3-wave rally that did suggest a B wave, and that we would expect a fall into a C wave. We got that. So now we're looking at 5 waves up and a possible expanded flat, or maybe you can move that wave 1 high to the high here, and we'd look for a zigzag down. But for now, I think it's splitting hairs. It doesn't really matter at this stage. You have a previous 4th wave there at about 113 flat. So for now, early Monday, I'll look for a drop into the 113 area, and then next week again a push up in a possible wave 3 or wave 1. So we'll see how that turns out next week. A break of resistance there will pretty much confirm 3rd wave up. Okay, so that is the FX market done. Let's move on to the stock market. And we are lower again today, but I want to kind of dig into this structure here, because we may have a developing alternate account after today's sell-off. Even though we were expecting a sell-off, but it hasn't been as clear-cut as we would like, or as I would like it to be. Even though I would have liked this market to roll over a long time ago, and it hasn't done that yet, so we're pointing the right direction, but we're not there yet. There was a certain politician in Ireland a few years ago who ran his re-election campaign, and it was the government re-election campaign, and their slogan was "a lot done, more to do." It wasn't very wasn't very either endearing or inspiring. So that's kind of where we are in the stock market. A lot done, more to do. And anyone from Ireland will know who I'm talking about. Okay, so here's the decline. The decline off that wave 2 high is pretty damn impulsive. I can't. Maybe there's another way of viewing it, but I don't see it myself. I think it's most likely a wave 1 down, and either an A, B, and developing B. Excuse me, either a 1-2-1-2 structure, or wave 1 down and a complex 3-wave correction in an alternate wave 2. So if that was the case, let's get the little marker out and do a bit of scribbling and see if we can make sense of that, rather than leave people in the dark. So that if that was the wave 1 low there, you would look at wave A up, and then maybe a triangle B wave, and then maybe a C wave up. So you would talk about an A, B, C, D, E maybe, and then a rally and a C wave. And that whole move would occur within a trend channel, so you can get a trend channel around that. Some sort of action like that. I think the rally in the C wave wouldn't get a whole lot higher than 25,000 again before we spill down, and that's the alternate account now at the moment. I like a nice rapid descent off that 3-wave correction higher, and that suggests to me a wave 1 down to begin a 3rd wave. So what the thesis that I'm working on here is that we have wave 1 down, a 3-wave correction in wave 2, and we're beginning to decline again into wave 3. Let me get rid of that. And as I speak this evening, I'm kind of, or like I said earlier, as this day has kind of progressed, well, I can see a 5-wave structure here, so that's a decent thing, a decent indication. But as today has progressed, you could also count this as a 3-wave type of expanded flat, maybe B wave. So you could go A, B, and C. So that would also count as an alternate wave 2 grey. So if that was the case, well, then you would expect a rally maybe Monday up to, let's give it a price up to break 24,827 again. So maybe to pip into the 24,900s again, and that would be in an alternate wave 2 there. Again, a 3-wave corrective rally, and the outlook would be for a decline in wave 3. But for now, we may have a wave 1 down, wave 2, a 5-wave structure in wave 3, maybe a corrective structure beginning this evening in wave 4, and a drop below the wave 1 low again, a drop into the 24,000 area, or very low 24,000s, excuse me. And maybe even a break of 24,000 would indicate that we've got a wave 1 down, and we'd be expecting a smaller bounce early next week. Probably 1,000 point lower than the previous count, maybe 24,200 or 24,300. So again, we are kind of bouncing around lows with impulse waves to the downside, still developing. If that's the case, well then the long-term or medium and long-term outlook will line up with the short-term or the short-term outlook, let's say, will line up with the medium and long-term outlook, which is very hard to the downside in a third wave, and that's what the wave count is calling for here, is third wave down in blue. So I'm afraid we just have to wait until early next week to see if we can get that impulse structure again in wave 1 and wave 2 to call a decline in wave 3. So that's what I am lining up for next week again. And you can see why the theme is this week is a little bit frustrating. We got a drop again in gold this evening, and I still think that this is a fourth wave, and I have an alternate count which suggests it's a second wave, but it's definitely corrective. And if we can get, will we get a little bit closer there? Today's, or the declines over the last couple of days, looks like a possible 5-wave structure in a C wave. And we had a nice bounce this evening, which again suggests that this correction is over. So we could have a, let's get my little marker out again. We could have 3 waves down in A, maybe 3 waves up in B, up to that point there, and then maybe a 1, 2, 3, 4, 5 in wave C of 4. These things are always open to interpretation, but like I said earlier, the further a correction goes on, the clearer it tends to be, and the more likely the kind of resultant action of that, or the more likely, if you get kind of confirming resulting action off that, or what I would call confirming action off the end of a correction, well then you're pretty much safe in the knowledge that you're not far off the mark in your wave count. So the fact that we've got a nice bounce after a 3-wave corrective looking structure will say that this is a definite correction, and we should expect further upside in gold. Now the alternate count here looks calls this rise off the 28th of November low as a wave 1 instead of a 1, 2, 3 structure, and this correction of the 7th of December, a decline or high, the correction of the 7th of December high is viewed as a wave 2 in the alternate count. So you could have a wave 1, 2 in blue, a wave 1, 2 in brown, and a wave 1, 2, if that's the case, in pink. And again, we could move this wave count up by a degree as well, and that wouldn't, it would still suggest the same thing. So I think either way, we're looking at a higher week next week. I think we've completed a correction, and we've bounced to a higher low this evening. So for the moment, I still want to see that 1228 level hold. Excuse me, that previous high here in wave 1, so 1228. 70, I want to see that hold, and I want to see a rally to complete either wave 3 in brown, or to rally into a third wave up in within that wave 3 brown. Excuse me. I've been long gold for a while now. I've been I've this time instead of like trading the derivative, I've just decided to go full into the physical market and just buy it using the brokers. So or using those what would you call them? Gold money, and that's just the way I've decided to do this, play this, because I think going into next year, I think the financial system is going to be under a whole lot of pressure. I don't want to be a kind of a pawn within that very big system. So for next week, let's get let's see if we can get a nice impulsive rally in a possible wave 5 of 3. Move on. I usually tend to drag in around the gold and into crude oil. Okay, so crude oil has been another one of those very strange, and as I had mentioned before, completely untradeable in my mind markets of late. But obviously people are trading it. I'm looking at quite a large degree wave 2 correction to the upside. And that may have started off yesterday's low, but this evening I'm taking another tack. I'm kind of reversing back, taking a 180 degree reversal on the previous wave count, and I'm calling this whole sideways move as a triangle again, even though we got a break out of a triangle yesterday. That's just the way the cookie crumbles. It's most definitely a B wave. Whatever's happening is a B wave, because a B wave is one that is just going to kill you over and over and over again. And it doesn't kill you with kindness, it kills you with hate. And this has just dragged on and on and on, and gives false signal after false signal after false signal, which itself should be a signal that is a B wave. that the market is undergoing a B wave. So I think we can track. We've got a nice 3-wave structure up in wave A, a possible A, B, C, D, and E into this evening's lows, and we should be expecting a rally up in wave C. Again, the target kind of remains the same at about 56.50 or so to complete. Minimum target would be for a break of the previous wave A high, would be 54.70 or so. So next week, I still want to see upward momentum in crude oil to top out up around the upper trend channel there, between 56-57. And at that point, then we'd look lower again into a third wave down. Okay, so this is the S&P. S&P again making new lows this evening, which is good, but the same dilemma kind of holds in the short term. I was talking last night about the kind of amassing number of negative signals that's abounding in the market, and the fact that nobody seems to want to look at it. But then again, maybe I'm just temperamentally suited to look at the negative. That's just where my mind goes. And the one more of those signals was the fact that we got a nice downside bearish death cross again on early November. Was it on the 10th of December again? So we got another break to the downside. We have price trading below both the 250 MA for most of the last, well, when did it start? Excuse me. Oh gosh, for the last 2.5 months, almost 2 and a bit months. Apart from a blip up a couple of days in to complete wave 2, we've had pretty much solid trading underneath the 200 MA, and that doesn't augur well in general at all for a healthy market. We've had declining leadership in the market itself, and from that pie chart that I showed you earlier on in the week, that 50% of the S&P is now trading in a bear market, so 50% of the stocks, so 250 stocks, probably more now actually. This you could probably push that up to 55% right now, given today's declines, but let's call it a good clean 50% of the S&P is officially in a bear market. That's the stocks within the S&P. That'd be 250 stocks are in declines at or above 20% off the recent highs. So there is signal after signal after signal within both the economy and the market, which is pointing at a very large move to the downside developing. And we want to get our kind of ducks in a row before this completely spills over. And hence the reason why I kind of opted for the physical gold option this time around, rather than just kind of trading the volatility in the market, or rather than just trading the gold price itself. I've been trying to amass a physical position. Okay, we have the same pattern off the high here. We have a wave 1 down and a kind of truncated flat in wave 2, where wave C did not break the previous high of wave A. Well, we kind of came within a couple of pips of it, but it didn't break it. I think we may have a wave 1-2 pattern underway. But again, there's an alternate count also, which is pretty much the same as the Dow. The S&P and the Dow are moving in lockstep right now. Okay, so we have a wave 1-2, and I've marked this, or labeled this as wave 1 and a possible complete wave 2. And again, we have this kind of the idea that we could have a wave A, an expanded flat wave B, and a wave C to develop next week. That'd be another alternate view. So you could call that the second alternate. So we have two alternates calling for a last run up, or a final run up in a wave 2. And we'll see how that kind of plays out on early Monday. For now, I think we've got a nice 5-wave pattern again into this evening's lows. We're kind of hanging at the previous wave 1 low, so that's 2603. The exact low came in at 2603.58 again, so we're hanging exactly at the previous wave 1 low, so we'd probably expect that to kind of give us some sort of a support and a bounce in wave 2, maybe early Monday. For now, though, it looks like we have wave 1 down, large degree wave 2 complete in blue, possible wave 1 down and wave 2 complete in green, and wave 1-2 in grey, and wave 1-2 in pink. And this is the most bearish outlook right now. For Monday then, we want to see that previous wave C hold in a second wave correction. If it breaks, then we'd switch to one of those alternate counts, but we'll see by Monday evening, most likely. And if everything goes according to plan, we may have a pretty tradable high develop, a pretty tradable lower high develop by mid next week. Okay, so that's 2685 you're looking for to hold on Monday and Tuesday. Okay, so here is silver, the ever-present disappointment in my life. I'm looking off the recent lows for at a possible leading diagonal wave 1 with 3-wave correction in wave 2. I have been kind of the opinion that silver just hasn't been as let's say positive in its action over the last while as gold was, but the fact that gold is looking so bullish at the moment, I am kind of erring on the side of the bullish outlook in silver as a resultant. We've got a kind of a pretty impulsive sell-off this evening and a nice bounce as well, so it's a little spike bounce off the low, so that kind of does suggest to me that it could be a C wave, and you would want to see rallies on Monday again to break back up into that higher 14s again, and definitely by Tuesday I want to see a break of that 14.7 1480 region. And if this wave count is correct, well then next week we have to see a break of resistance. And I know I've been saying that for a while now, but silver hasn't broken down either yet, so you know, depending what way you look at it, you could say that the fact that we're still creating higher lows and we're still kind of looking corrective to the downside that you still have to keep the flag flying, that this could be a turn for the better for the long term as well. Okay, so silver next week. I'm still looking for higher prices in a possible third wave up. So this is the final market. This is the US Treasury. This is a 10-year note. And if you've hung around until now, well done. Off the high, I've been counting a possible wave 1 down. Worse, I'm not completely sold on that just yet, but it's a definite maybe. Let's say at this stage we could also be seeing a larger degree correction to the downside, so that possibility is always on the cards. Let's see if I can get this chart working for me at all. This is MetaTrader 5. I've been forced to move to MetaTrader 5 for Admiral markets, and I don't like it. Even though the general consensus is that it's better, but I don't like change in general. I say a lot of people are with me on that one. Okay, so the movement off the high, I'm calling that a large C wave in a wave 4. So let's pull down our labels, and we've got a drop off that high, and it's a messy kind of a structure, so I don't particularly like it, but it could also be a diagonal, so don't rule it out in a way. So far we've got a pretty decent 3-wave structure in wave 2 into today's high, and we've sold off again. So we're looking for next week. I'd like to see a push down towards that previous 4th wave, which would be around 118.90. So break a below 119 again next week. To me, it would confirm a 3rd wave down and a possible turn in the market to a longer term downtrend. But there are a few caveats that could throw a spanner in the works on this one. And I think I might go into more detail on them next Monday maybe. But for now, or in general, let's say over the next few weeks, I want to see a turn in this market. I want to see this larger 5-wave structure down complete before we start kind of picking levels for the completed correction. You want to see a 3-wave correction off that, and if we do get that 5-3 pattern, well, then we're pointing singularly to the downside. Okay, so I think that covers it. I hope you all have a lovely weekend. Thanks for being with me throughout the week, and we will pick it up on Monday evening again over on the site. Have a great weekend. God bless, Godspeed, and be safe, everyone. See you Monday.